Hello, my name is Heitor Paiva. I am the oil analyst here at hEDGEpoint Global Markets, and welcome to another market update. Well, natural gas markets have been extremely impacted by the war in Ukraine as Russian flows to Europe basically were trimmed as a response to all the Western sanctions on Moscow. If you look at, for example, the total volume that Gazprom sends to Europe, they're down by more than 70% year to date. And these flows could be further trimmed as Russia has become an extremely unreliable supplier to European buyers. It's important to mention that LNG imports to Europe have been rising since 2021 in order to try to partially offset this Russian supply loss. And much of these flows were being sent by Qatar and by the United States. But a recent explosion in a top LNG processing plant in Texas basically wiped out more than 20% of the total U.S. LNG export capacity. As a result, we're seeing LNG shipments below the pre-explosion levels in the United States. And this is very bullish in a market where basically you got European and Asian buyers fighting for cargoes in the international market. If you look at, for example, TTF futures, you can see that they're being traded at a significant premium over the Asian JKM marker, which makes a lot of sense because Europe needs to attract additional volumes. And the only way to do that is by placing a premium in its TTF price in order to create an import arbitrage opportunity. And the problem is that we are seeing that South Korea and Japan and other Southeastern Asian nations have started to buy more LNG ahead of the winter. So basically, this has the potential to tighten the market in a moment when S&Ds are very tight, leading to higher prices internationally speaking. Looking at the United States, the Freeport plant is expected to start operating again in October. And this is a very bullish news for natural gas markets in the United States because basically it's expected that LNG exports will start to rise again, leaving less natural gas inside. So basically, the only way for this not to happen and for stocks to refill ahead of the winter is for regional natural gas prices in the United States to rise in order to curb this export arbitrage. Otherwise, we remain bullish with natural gas and LNG prices, especially as the United States continues with a relatively stagnant domestic dry gas production, and Russian gas is expected to continue being trimmed to Europe going through the winter. Thank you.